Cause we're back in black. Hit the sack. Gotta check that Blackstone. We're back because Blackstone is trickling back down. It's trickling back downtown to Chinatown. It's at 82.45 right now. 82.41. Will it keep going down? I don't know, but we're seeing the premiums go up. So we are at 70 cents on the $77 strike. This is only a 4-day trade. So 4 days to expiration. I like the 77 for some reason. It just keeps calling my name. And, that's still a really nice return, nearly 1% on your money in 4 days. But it's also the risk. It's hard to buy something when it's going down right before your very eyes. I mean, look at the big red candles down, but this could be the time of the day. If you're going to make a trade on it, this could be the time. Now, I mean, make the trade and it continues to go down. That's the risk. That's the risk it takes. So let's take a look at this secured put right here. And 70, can we hear 75 cents? That would be crazy talk. Could we get 75 cents filled on this? Let's find out. It could fill right before our very eyes, and it does. So $375 on the collateral of $38,500 in 4 days. Now, that could easily be, it pulls the old Signature Bank on me and Blackstone goes belly up, and then all that money just evaporates into the ether. Come back here, dollar bills, I missed you already. But Blackstone likely won't do that. That's what we're hoping. So let's just do quick math and see. I like to do fantasy math, right? So let's do some fantasy math based on the actual days to expiration. Okay, so if we take 375 and we divide it by 38,500, okay, we get just under 1% in the 4 days. But let's divide it further. Let's divide it by 4 days to expiration, okay? But then, so now we got a daily number, and let's then multiply that by how many days are in a year? I don't know, 365. So we'd be at an 88.8% return on our capital with this fantasy land type of math, right? Where we take the days, so the per days. Now, of course, there's actually less than 5 trading days a week when you factor in the days that are not traded on all the holidays, all the major holidays that are out there. So I think the average is around 255 trading days in a year. So what if we just did that math? How would that look? So if we did the 375, divided it by 38,500, and then we divided that by the 4 days to expiration, and then we multiplied this number by 255 as far as trading days, we'd be looking at a 62% return on our collateral. Now, of course, that is in a perfect fantasy land math scenario, because we'll be watching this. I don't even know if we'll allow this to go to expiration. We'll see, because our friend Blackstone can continue to go down, right? So now, since we made the trade, we look like geniuses because we made the trade right in when it was getting to the low of these thick red candles, and now it's gone 3 up in the meantime, but it could continue to go down. It could go down today. It can go sideways, but I would imagine, knowing Blackstone, it's going to recover a bit of ground this week, and hopefully we'll recover that right before our very eyes, and then we could either glide the 375 into expiration and keep every bit of it, or even at 50% profit, I would take that on this short of a trade with all the volatility that is brewing in the marketplace, especially in a stock that would be considered in the financial industry, Blackstone. So if we look at Blackstone over here, if we look at Blackstone, couple of things, because I was actually looking at Amazon to make a similar trade on Amazon. Now the difference is the premium wasn't nearly as attractive on that type of a trade with Amazon. But let me get back to Blackstone real quick, then we'll talk about Amazon. So on the Blackstone, if I look at the averaged, remember I was talking about that dividend yield theory. Basically, the dividend yield theory states that long-time dividend-paying stocks will revert to their mean, meaning they'll go more towards their average than anything else. So over the last 4 years, Blackstone has averaged a 3.89% dividend yield. Okay. So right now it's had a 518 last year, and the forward right now is looking at 429, 4.29% dividend yield. But if we look at the payout, is $4.40. So if you take 440, and then you divide it by, let's go back here, then you divide it by the average. Okay, if we divide it by the 3.89, divided by 3.89, based on dividend yield theory, Blackstone should be worth $113 a share. So that makes me feel pretty good. Then if you go over here, my other friends, Alpha Spread, they don't know me, but I know them. It says their intrinsic value is 103.21. So again, makes me feel comfortable making this type of a risk-bound trade. And then the other part, of course, is indeed, if you do get stuck, say I get stuck those shares at 70, was it $77? You don't even know. It was 77, right? That was the number that kept flashing before my very eyes that I was looking to enjoy. Let's look at this and see what let me confirm that it was $77. There they are. Yes, $77. So if I get stuck those shares at $77 and it plummets through that number, so put those shares at $77 a piece, but say it goes down to $65 in the meantime, so I'm not able to really collect much premium on selling covered calls because I'd have to sell them below my cost basis, which we don't want to do that. Then what makes me feel good is indeed collecting the dividend, collecting the $4.40 per share per year. Okay. So just on that trade alone, if you've got 500 shares, right? 500 shares, and we multiply it by the yearly payout of $4.40, that's $2,200 a year that I would be putting into my pocket just for holding the company's shares. So that's what went on to my mind in choosing Blackstone over Amazon, and I'll show you the other reason. So, because Amazon doesn't pay dividends. So if you get stuck the shares and it plummets and you're not able to sell covered calls for any type of real premium except for under your cost basis, which we don't want to do if we don't have to, then those dividends are attractive for Blackstone and all dividend paying stocks. That's why I prefer to trade on dividend paying stocks, just in case, just to protect my backside. So if we look at selling puts on Amazon, same expiration as we did with the Blackstone, 4 days. So that's this Friday. And you walk yourself down here. And if we're looking at that 1% rule or close to it, the 94 is over 1%. So it's $1.03, but then it drops all the way to 78 cents for the 93. So, and you're only looking at, look at the difference in the chance of probability. So the premium wasn't nearly as attractive. And then again, add that to the fact that there's no dividends. I'm sorry, Mr. Bezos, he doesn't pay dividends to someone like you, Bart. So that's what we have going for us. Once Amazon stabilizes, when they become less and less of a growth stock and just be this behemoth of creating billions and billions of dollars in profit, then they will one day begin to return some of that capital back to the shareholders in the form of a dividend. But for now, they don't. So we are holding off on the Amazon trade. I would imagine they just announced today that they're going to cut another 9,000 employees from the payroll. I thought that maybe that that the shares could be going up after that announcement, but they're not. They've gone down today, and they've kind of stayed down, stayed even. It was, they've rocked back and forth a bit, trying to find their way through here. But I like puts in the 80s more so on Amazon. So I mean, we could easily look to a longer dated trade on the puts, getting into the 80s and still having some sweet premium. So if say we look out to April 21st, so it's 30 days out, and if we were to look at the one percenters, we can get into some real nice numbers. How low can you go? Can you go down low? And we could go all the way down here to $84 strike, right? $84. In fact, we may put that on right now. 30 days. Now, of course, you're changing your return, but you're also changing your risk. You're all the way down here at a 12 delta, 86% chance of profit. When's the last time we saw Amazon at 84? We'd have to take a look. Let's take a look at it now. Well, let's go here. Let's go here to the Amazon. And let's see, when's the last time they were at 84 bucks? $84. Let's look at let's do 6 months. So at their lowest, they're at 86, right? 86.14. So that's a trade that we should be able to make with a limited amount of risk. Now, again, this is the keyword there is risk, right, Bart? It is. The keyword is risk. It is still risk that is involved. And we have no idea what this economy is going to do. The news hasn't been great lately, because we're still fighting inflation. The jobs market is still there. That's showing to be a little stubborn, right? The banks are showing a lot of weakness because of how quickly the rates have increased. They've caught them kind of with their pants down with their long-term bonds paying way less percentage, and now their depositors looking for higher returns on their savings. Of course, they're going to want to do that. So the banks are caught kind of with their pants down in regard to that. So we've had some troubling news from the financials. So if we look at getting in on the Amazon and collecting 88 cents, and we might have to do less. Now it's got a real tight bid and ask. That's nice. And that's because Amazon has such high volume that's traded daily. So we might even be able to get 89 cents. 89. Might be able to get 80. No, it's already dropped to 87. So 88. Let's do 5 contracts and let's see if we can do $440 on our money in 1 month. And that has filled. So if we look at the math, okay, so we are coughing up $42,000 in collateral, right? So $42,000 in collateral, but we're over 1% for the month, okay? If this trade goes through and it expires at full profit, that's making this trade 32 days out, that's what I expect it to do. If it starts trending down towards our strike price of 84, then we might have to manage the trade. I just don't see that happening. But again, we have no idea what the Fed's going to say Wednesday. We have no idea what the economy is going to show us between now and then. We could have 2 or 3 more bank notices of, hey, we're going out of business. Is there anybody that could bail us out? I know Warren Buffett's put on the phone with Sleepy Joe Biden. Excuse me, if anybody needs to borrow any money from me, I will lend you the money at a high rate of return. Because I remember he did that with, he did it with Bank of America in like 2009. He did it with, or no, that was 2011, I think. He loaned Bank of America money. Really? Then he also loaned, I want to say it was Goldman Sachs, like in 2008, he loaned them like $5 billion at 10% interest. You go, Warren. He's the man, isn't he? So we got $440 and we divide it by $42,000, right? And we get 1%, but it's in 32 days. So theoretically, you could do that once a month. But if we round it down to 10 times a year, this exact type of trade, we could be at 10.4% return on our money on a stock that doesn't pay a dividend. So that's kind of like forcing Bezos. I know, Jeff, you said you don't pay a dividend, but can you just cough up, like 10.4%? Sure, I guess if you're going to trade some options with us, then we will give you 10.4% for doing so. So we'll keep an eye on this trade. It is now on the board and 5 contracts at $84 strike price. So we're hoping to not see Amazon go anywhere near that. In fact, if we see it go up, if it makes a quick recovery, and gets up even close to $100 bills. And if we look at Amazon, it was just on February 2nd, it was at 112. Just the other day, March 16th. That was just a couple days ago. It was at $100, right? So it could easily return to $100. And in doing so, then we're going to have some nice profit on the board and we might just grab it. We might just grab it because of the volatility of the market. I'm fine with taking profits. And the key word is what? Drum roll, please. It's profit. Yes, indeed. So there we go. Thanks for joining me with the Blackstone and the Amazon. Please subscribe to the channel if you have not done so. Like the video, leave me some lovable comments, and I swear to you, I will see you in the next video.